Welcome to this week's office hour calls. I do this every single Wednesday at 12 p.m. Central Standard Time for our OAT Unlimited members. These are members who are part of our inner circle. If you have an unlimited subscription, you are in the OAT Inner Circle, which is where I personally work with you to build out your complete options bot portfolio and follow up with you weekly to make sure your portfolio is making money in this market. If there's any adjustments that need to be made. Anyways, if you're watching on YouTube, you have the ability to tune in and watch, but only the people here can actually ask questions. I may get YouTube questions at the end, but this is for the unlimited members. Sweet. So let's dive in. When I go through the slides here, the first thing I cover is the market overview. So we're going to talk about where is the market right now, which helps us decide what's going to happen moving forward. So if we look at it, the market trend based on our indicator. So instead of using things like trend lines or other issues like that, where we can't 100% pin down what's going on every time, if we use math indicator that is consistent, we can know exactly what the market trend is, no matter who's looking at the chart. So we look at the market analysis indicator, we see that we are inside of this green zone, which tells us that we are within a bullish market. So inside of that bullish market, it means that we're going to continuously head higher. Now, if I'm breaking down my thoughts on this, you can see here that we are bullish, but I'm waiting for a break above 7,050. Now, again, I'm looking at ES futures. So this would correlate to SPX price, but if you're looking at SPY, you would have to convert it to something like that as well. It'd be around, I don't know, probably a $700 level. But if we're looking at ES futures, you can see that we consistently hit a high at this $7,050 level. We just keep hitting it and getting rejected. We're getting close to that level again after a previous rejection. You can see here that we have a low around 6,800. So we're basically trapped in between this level, which is very good for us as option sellers because as the market does nothing, data decay kicks in, allowing us to profit. So really, it is a heyday for us, especially for strangle trades, which you'll see here in a little bit. But overall, we do expect, or I do expect the market to be bullish here over the next 3 to 6 months, just because when we're inside of this bullish zone, it tends to be that way for 2 years. It's already been a little over a year. So I would say we have about 6 months left before we're looking at a different trend in the market overall. Now, if we're looking at my personal options bot portfolio, we can dive into this together if you have questions on that. But the one that I created and started from scratch here, basically for the start of 2026, the allocation is this. We have $65,000 in options bots generating roughly about $3,000 a month. We have 90 grand in SGov, which is basically a treasury bill ETF. This is so that the money that's not being used in trades is still generating money. And then I have $45,000 in cash. Now, this 45 grand in cash, if you guys have been through the training inside the members, you know this is how we structure things because the options bot shouldn't take up more than 50% of your account, but you can still use it to generate amazing returns, even though you're only using a small percentage of your account for these bots and trades. Then the rest of the money, minus the exception of a little bit, will go into a T-bill so that it can generate interest for you so that you don't have all that money just sitting there doing nothing. So based on a 4% yearly return, which is a 4% dividend that gets paid out monthly, I'm making about $300 a month from this alone. And then I have 45K in cash. Now, this is for safety because as we use futures options, it means the buying power can increase on us if risk increases. And so I need to have some cash set aside to be able to handle those buying power increases. And so right here is a very great portfolio. We're going to generate on average, again, some months better, some months worse, about $3.3 thousand. Now, if we just do rough math here, 3,300 times 12, that's going to be about 40 grand this year, which is going to come out divided by 200,000, a 20% return on the year, which again is a little more than double what the average market does. So very great returns. Now, my thoughts, this is the best portfolio that I can create with options bots. Again, having a bullish spot running in bullish markets, a bearish spot running in bearish markets. So once you get this core portfolio set up, once it's aligned to the market, meaning its entry settings and exit settings are all based on the trends, that it will adjust and change itself based on where the market is, which is exactly what our bot portfolios do for unlimited members. Then basically sit it out and let it ride. There's nothing else you need to do or touch because it's good for you to go. Now we're talking about the top bots of this month so far, which is we're about 18 days into February. So February 1st through February 18th so far. We have some huge winners on the leaderboard. We have Daniel, who is an OAT Unlimited member, up about $15,000, 96% win rate so far this month, which is amazing. We have David, also an OAT Unlimited member, using the same futures bullish type of strategy, up $5,400. And we have SG. I don't know who SG is. I'm not too familiar with that name. Might be an OAT Unlimited member, but might not. Not too sure. But we have Safari, Maria, David, Scott, Midhat, all taking up these top 8 here, all of which are OAT Unlimited members inside of the OAT Inner Circle program. So if you want to share those bots, talk with them, you guys are able to import all of these bots with no restrictions. If you also want to talk to the people who built out these bots, feel free to message inside of our private Discord or message here, and I'd love to be able to help you out. Those are some of the top bots. So again, Futures Bullish Bot 111, Futures Bullish Bot 111. Obviously, you guys know I teach this in the training. We go over this every week. This is one of my favorite bots by far. So if it takes you trade account, take advantage of the 111. Once your account scales past 50,000, then you have the funds to properly do this. From there, we have the SPX biweekly Rainmaker. This is a strangle strategy. That's the one right here. This one worked very well so far because we've been very sideways, very neutral. If you're not familiar with the strangle, it makes money when the market stays below a certain level and above a certain level. So when it's range bound, which is what the market has been. So this strangle strategy has been crushing. You can see here, it's up here in the top 3 with about a $5,000 return so far. And David's using it here as well. And then Midhat here using this strangle strategy. So my thoughts, again, keep the options bot portfolio simple. Bullish bot, bearish bot. Ideal bullish bot is 111. You can also use a put credit spread. I use both. You can use a bearish bot that starts entering when the market enters bearish territory or a downtrend. And then once you start scaling past 100 grand and you have more money to deploy, you can either start diversifying your bullish bots or moving into more things like a strangle or biweekly Rainmaker. So understand there is a system and a pattern with this. If you haven't seen it yet, guys, inside of our private Discord for OAT Unlimited members, there is a training on how to scale, what bots you're going to want at different times based on account sizes, based on risk tolerance levels. So please check that out, but you're also welcome to ask more questions about that here. All right, that is the end to my presentation, short little 10-minute thing. I'm glad we have a huge group here. Again, we have Bobby, we have Dale, we have Kaylin, we have Robert, we have Tron, and we have Vera all live on Zoom. So glad you guys are here. And it looks like we have a couple of people watching on YouTube, which is cool. Might be first and only, might continue. I don't know. We'll see. But let's get to your questions now. I'd love to help you guys out as I can. Tron says, can you confirm that turning off bots allows it to still manage active trade? That is correct. When you turn off a bot, the only thing you're changing is you're preventing it from entering in new trades. Okay. So if a bot's turned off, still going to manage your current trades, not put on new trades. If you don't want it to manage your current trades, that's when you go into your settings here for the bot and you go down here, which says disable automations for all the bots connected or all the trades connected. And that will prevent it from actually closing if you don't want it to manage the exit. Good question, Trump. Yep, we can see here the market's been green today, primarily because of the bounce. We're still in a bullish market. So if we sell off hard, there's probably going to be, a recovery. Especially here, this is a great example. These are one of my favorite. Let me remove the market analysis indicator. One of my favorite little things is this doji candle, right? Once we get near a level of support, which is what we're seeing here at 6,800, which is the level that I was previously talking about. Once we get there, then you have a doji candle, which is small body, long wick. So when you see that form at a crucial level, whether that be support or resistance level, it tends to reverse. So again, you can see the doji here at a resistance and we kind of pull down, doji here at the bottom. You can tend to see those if you're watching for them at key levels. Robert says, will I also, I'll try to DM you in Discord, but I always get an error saying I don't have permission. Yeah, you may not be a friend of mine. I think I only allow friends to message. But yeah, so if you just send me a friend request, you should be able to do that. But you can also just message me inside of our main chat for Unlimited members inside of our private Discord section. And I'll respond to you instantly there as well. Truman says, thanks. Wondering if you have experience backtesting on TradingView and how good those results are compared to others. Great question. Yeah. So TradingView is a great backtesting tool. The only issue is that it only allows you to backtest stocks, and ETFs, and basically the underlying asset, not options. So if you're trying to backtest options, you're going to need something like our free tool, which is the options trading toolbox, or Option Omega, or something like that. If you're trying to just get an idea of how does this trend if I enter in during certain phases, You can do that very well with the TradingView backtest, or maybe you just want to test SPY because you're understanding the trend of like, hey, if I buy SPY every time it enters the bullish phase or every time it comes down here, what would my return be? If you're just trying to base it off stock, TradingView is a great way. But if you guys don't know yet, if you click on your Options Auto Trader profile page, click on resources, an amazing bonus that you guys get for being an Options Auto Trader user. This is for all Options Auto Trader users, is the Options Trading Toolbox, which is a completely free site that has so many tools that most people pay for. A back tester, which multiple people pay $1,000 or more a year for. Option screeners, which I know other people pay $50 a month for. Also strategy screeners, dark pool trackers, profit and loss visualizers, gamma exposure. Geez, I know people who pay $200 a month alone for this tool, and it all just got revamped, making it more accurate and faster. I don't know if you guys previously used the option screener, but when you clicked on it, it would take like 3 minutes to load. Now you can see how quick and fast this is. All the data is accurate. We have strategy screener that is now completely accurate. I know before the pricing was somehow off, but if you come in here to details, you look at this trade, you can see here a max profit of 53, max also 447. Sometimes it was a bit off, but if you go to the, like if I would go to my broker right now and plug in these exact trade legs, it would be $53. Like it is real time accurate. Same thing for trade ideas. You can see here the most recent one being, today in SPX opening range breakout, put credit spread. You can see here entry price 193. You can look at all those levels there here as well, the different trade legs, trade reasons, all this stuff. I know you guys know this, so I'm sorry for going through that. But anyways, back tester is available there as well to back test different things if you'd like. Sorry, that was a little much. You guys, let's dive in. Okay, let's see. Any other questions? Okay, Robert, you should be able to message me in Discord and I'll help you out there. I'll also look for a friend request. Any other questions from the group here? We have Bobby, Dale, Inga, Kaylin. I hope I said that correctly. Robert, Tron, Trushan, and Vera. Yeah, so you guys probably saw my email this week as well that I sent to everyone, which is basically for the last 2 weeks, almost 3 weeks now, probably. I've been working exclusively on order execution, making sure those success rates are super high, meaning that no matter what technological error, account, or broker issue comes our way, that we can always get trades entered and trades exited in lightning fast speed. Those numbers are now in the 99 plus range. So like 99% success rate that we always are opening correctly. We are always closing correctly. And those trades are being done in under 8 seconds for both opening and closing. Sometimes as little as 3 seconds. It just depends on the time of day and the brokers that we're working with. Some brokers are faster than others. But yeah, we're definitely very fast now, very, very accurate of making sure that your trades always get opened and always get closed. More importantly, on the close side, right? Because we want to make sure that we are getting trades closed, especially if they hit a stop loss. That has now been like completely worked through. Our success rates are very high. And so that's something I'm proud of. Now I'm moving into brokers. In the progress of adding things like E-Trade and Moomoo for international brokers. And then I have a whole host of other things that you probably saw me mention, which is like stock automation. I might be wondering, why would you do stock automation, Austin? Because with stock automation, I can then control things like T-bill or ESCO. You guys know this based on how we run our strategies. You guys have been through the training as Unlimited members, but we have 30 to 50% of our account in options bots. The rest gets split up between cash and a short-term ETF that pays us. That's a very safe one. So a T-bill like ETF that pays monthly dividends. And so SGov is a great example. So maybe I have more cash available. I want the options auto trader to be able to put that cash into SGov, or I want it to take it out of SGov or T-bill if I need more cash setting aside. So all that automation from the options bots to the full portfolio analysis can all be handled by the options auto trader. So stocks is coming soon, which will include things like covered call strategies, the wheel strategy, because those involve stock execution. So working on that, working on some amazing things as well. So you'll definitely see a lot of amazing features coming here, integrations, things like that over the next month to 2 months. So stay tuned. A lot coming on that side. Bobby says public support options. I'm not too sure. Public supports options that I can definitely look into it, but I'm not too sure right now. Trone says dynamically moving dollar in and out of SGov, etc. would be awesome. I completely agree. Yeah, the whole goal of this platform was to take the way that I was trading, which is again very option selling heavy, specifically futures option selling, and then using other assets that, like SGov or T-bill or things like that to make up returns that's just sitting there. And so that's what I was doing. I just wanted a way to fully automate it. And so now that we kind of nailed down the options automation side of it, I do want to introduce some of the stock sides that we can dynamically move in and out of T-bill, SGov, or wherever else you want to put that money that's just sitting on the sidelines. So yeah, definitely coming soon. Oh, another huge one coming soon on the roadmap is legging in and out. I know that's a lot of people want to do that. So for instance, maybe you're entered in a put credit spread and then your short got hit and you want to close out the short and then let the put ride down. You can do things like that, like closing a single leg. That takes some work, but that's coming too. So sweet. Let's see. Keelan says, can we manage futures bots with 25K in capital? Absolutely. All this comes down to trade sizing. So I know I talked about this before and there are lessons on it, but I'll break this down for you just to be aware here. So all depends on what strategy you're running. Kaylin, if you can tell me just to help me out, are you running like a 1-1-1 or put credit spread? Are you just asking to ask? Because that'll help me break down. Okay, 1-1, perfect. Thank you for letting me know. Okay, so here you go. We're looking at a 25K account. We can obviously run based on buying power needs a 1-1-1 on this account. A 1-1-1 would take roughly $8,000. So this means one trade is going to take up a lot of the capital because we need to consider, sure, 25K is the account size, but we're not wanting to trade with more than 50%. We're going to be in the 30 to 50% range. So let's say we are okay going up to 50. That means that we'll be using about 13K to trade with. That means with just one trade, 8K on the 1-1-1, it costs about 8K per trade. That means we basically used up all of our capital. We only have 5K left. So what does this mean? It means that we're going to have to use something else to allocate this 5K, maybe a put credit spread or something like that to get the whole amount allocated. But what it also means is that we have one huge risk point here. If this one trade goes down, it's going to take out a large portion of the account. What is much safer to do as an option seller is to make your trades a lot smaller and put on multiple. Why? Because when you put on multiple, you're spreading the risk across time, across different expiration dates, across different strike prices. And that in and of itself gives you an extra level of diversification without even having to move to a different asset. So I preferably like to use 1-1-1s above 50K so I can have multiple 1-1 trades running at a time. If I'm working with a 25K account, what I'm doing is I'm running put credit spreads and I'm doing a lot of them. However, if you want to do 1-1-1 and you're okay with that, that's completely fine. You're welcome to do it. That's just how I break it down. I prefer fewer, or I should say smaller risk trades, just more of them instead of one large risk, but only having one of them. So that's kind of the breakdown of those two of how I would run it. But I know people who love the 1-1 and they are okay doing one trade of it. What's cool is that one trade of a 1-1-1 will make you about $1,000 per winning trade. Now, again, you also have to factor in the risk, right? But that means from 25 grand, you can make roughly 12 grand, almost a 50% return on your money over a yearly basis. So if you're okay with the risk, you can definitely push it and see a nice return. Trishant says, 1, do you still use the bearish bot? Didn't see it in your portfolio breakdown. Absolutely. It's just not running and it's going to use the same allocation, right? So I had the futures bullish bot. I had the futures put credit spread bot. And these two are my bullish bots that are running right now. I do have the bearish bot, but I'm not really calculating it in my allocation because these, all share the allocation. So as we go into a downtrend, the bullish spots will stop putting on trades and the bearish spots will start. And so they'll kind of switch off the allocation. So it's pretty consistent. So I don't really need another one there. So yeah, it's there. Again, a portfolio isn't a portfolio if you don't have ways to diversify in every market. And so, yeah, so I have a bullish market, bearish market, and we're running that way. Next question 2, he says, are all the leaderboard guys using the 1-1-2 using it exactly the same way as you are? They just cloned your bot and did they tweak it? Yeah. So almost all of them are using our options bot portfolio. So as an OAT Unlimited member, you have access to this tab right here, which is the options bot portfolio. So you can use our deep bot portfolio, which again, the futures bullish bot, my 200K portfolio, which also the futures bullish bot, and they're really just using it just like this. If you review their settings, it really is just as they don't make any changes to it just because it works so well. So we go to leaderboard here. Daniel, if you want to import his bot to see the exact rules, but look, just a 111, 120 DTE. This is exactly how we run the futures bullish. Same exact thing. Futures bullish, take profit 50%. Oh, this one got beat out just now. It's a close call. We now have ES. What is this? An ES naked put 45 DTE. Yeah, just an amazing put selling strategy. 45 DTE, 35 put, 21. I don't know exactly what the settings are here. But still, yeah, put selling is the way to roll it. 3, what days of the week do you run your bullish bots, please? And yeah, so it really just depends on what your trading account size is. So I'll walk you through mine in a second, but first let's do the math here, right? So with a 200K account, again, follow this math for no matter what your account size is. Okay, if it's only 2,000 or 200 million, whatever, the math is this. First, you look at the account size. You look at how much are you okay with using. Me, I'm around 30%. So I use $65,000 of my account. Perfect. So now I'm going to allocate this. Okay, cool. So if I want to put this into trades, I know I'm going to split it between a 111 and a put credit spread. Okay. So if I'm going to do a 111 and a put credit spread, I'm going to go like this. And I'm going to understand how much risk I'm okay with each. And I basically split the risk roughly evenly. So I have 30K at risk here and 35K at risk for the put credit spread. So now that I know how much money I'm using for each, now I need to break down how many trades can I have. Well, if each trade will cost me roughly 10 grand, right? That means I can have 3 trades here, which is why I have 3 trades. And so now that I have 3 trades, I'm like, hey, how often do I want to enter? Well, I'll probably enter just once a week and then build up to 3, and then I'll have that. So that's how I determine my frequency, by determining how many open trades I can have. Same here, 35 grand. Okay. With this one. So each one of these costs me about $3,500 per trade, max buying power, right? Max risk, things like that. So that means I can have up to 10 trades. Wow. If I can have 10 trades, that means, I can have a lot open at a time. So I do 2 per week. So 2 per week. And then again, if I'm doing 2 per week, how do I like to split it up? Well, I don't want them on the same day, or I don't want them next to each other. So that means I could do Monday and Friday. I could do Tuesday and Thursday, Monday, Wednesday. However you want to break it up. There is no, at least what I've seen, I've done a lot of back tests. When we're doing with long-term futures options selling, or any type of option selling long-term more than 90 DTE, it doesn't matter what day you enter. Obviously, there's preference giving to red days, but like day of the week, it doesn't really matter. So if we're looking at my specific bots, the futures bullish bot, I believe is once a week on Wednesday. Double check that, confirm. Oh, once a week, any day of the week. So probably entering on Monday. So now I remember why I did that. So I did once a week, but any day of the week, so that when one of these trades close, the next one can immediately open. So you can see here, I'm getting close to the max profit on here, which would be about $1,000 return on this trade, which won't be too bad. And then as soon as it closes, whether it's on Monday, Tuesday, Wednesday, Thursday, Friday, it's going to immediately open the next trade. So that's why I have that running like that. And let's see, the put credit spread, I believe, is multiple times a week on Tuesday, Thursday. So if we look at this, yeah, multiple times a week, Tuesday, Thursday, because I want 2 trades a week. This is just how I run it. Again, Monday, Wednesday would work just as well. Monday, Friday could work as well. Those are just different options to run. You can see here I have 9 trades. So I have one more trade I can do here on this. And honestly, it's quite insane, right? Because you can see here, when these trades eventually all hit, I have 9 trades at about $200. A little more than 200, but just for easy numbers, 9 trades at $200 of profit. That's going to be $1,800 return. And I'm only using $7,400. That's a 24% return on my money just from these trades, which is crazy. Yeah, so they might be smaller, but I can put them on more frequently, which allows me to diversify risk across durations, across strike prices, things like that. And it gives me a really good return on my money. Galen says, got it, thanks. So safer approach is to initially more PCSs until the amount grows. If you're asking me what I would do with your account size, if I had 25 grand right now, how I'd set it up, that's what I would do for that reason. Sweet. Let's see. What other questions do we got here? Is it recommended to use futures bots with 25K balance? Yes, you can. Absolutely. If we look at this futures put credit spread bot, this is a very great one. Again, this is inside the options bot portfolio section, which you have access to because it's my portfolio. So if you go under my portfolio section, this bot, this exact same settings is there. But why I want to show you this is because max risk is 3,000. So like if it loses, it's max risk. You're going to be losing about 3 grand, which I would say is acceptable for someone taking more risk. But you can also make the risk a lot less by, making it a $25 offset instead. That would cut your risk to roughly $1,000 per trade. So you can always adjust the spread, right? When you're dealing with the spread, how far the spread is away from each other, how far these two are away, the strike price that you sold and the strike price that you buy determines your risk. So if you make that smaller, obviously you have less risk. But my max risk if I lose is 3 grand. But the buying power for the trade, because it's futures, is only $800. So I am putting up $800 to either make 250 or lose 3 grand. Now, again, with a 9% win rate, is a solid play. It's a bet you should take every time. Yep. Let's see. What other questions do we got here? Clarification on two above. Sorry. I mean, did they just clone your futures bot or did they tweak it in any way? I believe they just cloned it. You're welcome to ask them in our Discord, like, hey, David, what you do? Because I know David's active in there and David's on the top leaderboard right now. But yeah, what you can also do is you can go to leaderboard, click on their bot, click on import bot, and then underneath your import settings, you do what their exact settings are. So that's another way to do it also. But yeah, I mean, really all you need to run has completely, let me rephrase that. Everything you need has already been given to you. If you go into the options bot portfolio or and as an unlimited member, this is something that you exclusively get access to. You have access to different portfolios designed based on their different account size. We have a default one based on just like wherever you're at, you can use that. If you have a higher account size, like over 100 grand, you want to kind of model what I'm doing, I have my exact portfolio, these exact same bots. Therefore, you can just one click copy and paste. Now, if you're some of the smaller account size, like we're talking 25 grand and you still want to make a good return, then you can go to my portfolio section and just copy what I'm doing just with the futures put credit spread in this bearish spot, right? And you can add on and layer in this one as your account size grows, right? So that's kind of what we're looking at there. Remember what's amazing about this, and it's because you're not really quite seeing it in my account yet, you won't see it till next month, is that these trades, what we call ladder on themselves or build upon themselves. And so what that means is I just kind of started this brand new portfolio. And so I kind of started from scratch, cleared out the old positions, rebuilt them, right? And so with that, you're not really seeing the layering on yet. But as we layer on trades once a week and it takes about a month to close, once we get a month and a half in, we start seeing that work. And so what I mean by that is you'll start seeing trades close. And so I'm mentioning that because we're talking about the futures put credit spread bot a lot, and it looks like it's not doing much. But we have 9 trades open right now, or at least I have 9 trades open. These are going to start closing. And then as these start closing, we're just going to be in a nice closing loop. We're going to have two to three trades close per week, two to new 3 trades open. And then the next set's going to close next week. Next set's going to close next week. And then that's where really the monthly income starts building up. Once you have a huge amount of these and there's opening, closing, that's how it works. It takes a bit to build it though from scratch, which is what this is that you're saying. Any other final questions that we got here? I will stay on as long as there are questions. Shushan says lost volume. Vera says, does your bearish spot trigger automatically if the market goes into the downtrend? Absolutely. Yes, that is how the bearish spot is configured. These are the exact settings. If you copied it from our options spot portfolio section, Vera, this is how it works. Basically, underneath the entry rules, first off, trend following settings. This is the custom settings that you guys see it. You set it to bearish spot, which means that, hey, as soon as the downtrend is indicated, it is going to start entering. Now, how we enable that is we say once a week and we enable every day and we enable any session. That means as soon as the bearish trend starts, no matter what session we're in, no matter what day of the week we're in, it will allow it to trigger off that and start protecting the account. So that's how the bearish spot is configured so that it can immediately enter when the market changes trends. So yeah, the bearish spot is configured automatically to enter as soon as the downtrend starts. Nice. Good question. Awesome. Let's see. What is the market doing? Still slowly getting back up today. And then Vera said, adding to that question, and bullish bot will also pause automatically. Correct. Yeah. Yep. So if you look at inside of Discord, we have those trainings, resources, join our Discord. Oh, it just overrides it. Okay. So inside of here, underneath Oat Inner Circle, training library, right here, if you check out the training library, there's a whole section on, how to scale your options bots. But what I really wanted to pinpoint here is 4 Core Bots live training and other things like that. But actually, I realized what I wanted to point out here is onboarding. This is where it is. The options bot portfolio training. This is where I kind of like break down how to do each different bot, how the bullish bot and the bearish bot work together. But essentially, yes, if you have marked your bot as a bullish bot, it will only trade during this green section. It will trade once you're in this green section for the dip purposes. It will trade in the red only if we are coming up from the bottom. So if we're coming up from this side, it will then continue to trade all in this green zone. However, once you enter this green zone again, if you come back down, it won't trade reds. Like this section, it will not trade. This section it would trade because it's coming up and it trades in this green section. So that's what it means if your bot is classified as bullish. It will automatically adjust to the trend for you by trading only in these phases so that your bot, bullish strategy bot, is aligned with the bullish market. Now, if you are doing a bearish bot, then it will start slowly entering here for the potential downtrend, and it will invest heavily in here to trade these down moves. So as soon as it breaks, you'll see your bullish start closing off some trades, and you'll see your bearish entering trades to take advantage of this down move. Then I'll close out the bearish trades and then put in the bullish trades and do a rebounce for you. So yes, it will handle the trend all automatically like that, all based on this indicator. This indicator and system is built in to the options auto trader for you guys as unlimited members. Sweet. Awesome. Awesome. Let me check for any final questions. Thank you so much for staying on here. Dale, Kalen, Robert, Trone, Trushant, and Vera. Hope you guys are learning something or at least enjoying the community. We covered a lot of things today. A lot of great things coming in the options auto trader as well. Remember the ideal portfolio, bullish bot, and then ideally you have our settings, which allows you to immediately align it with the market, bearish, and then you have caps set aside for safety, and then everything else can get plugged into SGov or T-bill. Now, I've always said T-bill because that's the one that I've used in the past, but I was doing research this morning, being like, okay, what other options are out there? And I picked SGov for my newest one. And I want to walk you through why in case you were curious, because I've always mentioned T-bill. And so, yeah, let's just talk about it. There was a way to compare tickers. I think this is it. Yeah. What I liked and what I noticed is that in general, everything about these two are the exact same. So there's really nothing to do. Obviously, price is different. But what I did enjoy about SGov is if we look at the assets under management, which means the amount of money that this ETF is holding, is $73 billion compared to $6 billion in T-bill, which means that it's literally 10x the volume and size. So if we look at the daily volume of T-bill, it's about $92 million. If we look at the average daily volume of SGov, it's 1.5 billion. Now, why is this important for me? Well, since I am putting in like 100 grand into this as my holding period, I wanted to make sure that it was liquid enough to hold it. So obviously my 100 grand is less of a percentage, less of the daily volume in SGov than it would be T-bill, allowing it to get in and out faster. So other people with larger account sizes, that may be something that leans you to SGov. And that's one of the reasons I picked it. There's a second reason I picked it that I wanted to point out. If we look at the returns, these are both, about 3-month treasury bills. So again, backed by the government, no price swings, right? It's just a dividend because you're investing in the government. And so you can see them 1 month, 3-month, year, all that stuff, returns are identical. So returns are identical. But what I did want to show is the expense ratio. So when we're dealing with ETFs, ETFs are technically managed by fund managers. And so they get paid a percentage of your funds that you have invested as their reward for managing those funds. And so that's called an expense ratio. If we look at T-bill, it has an expense ratio of 0.15%. The expense ratio on SGov is 0.09. So it's almost half of expense. Now, again, this is still a very small expense. It's not even 1% expense. So obviously, almost nothing that you're paying to be a part of this ETF. But still, the fact that it has more assets under management, more volume, so it's easier for me to get in and out, and the fact that the expense ratio is lower, that's why I picked SGov. Now, I know someone's asking me to compare another thing, VBill, so we can take a look at VBill as well. ETF, VBill. Then I'll delete T-bill. So we look at SGov. Oops, better click compare. Okay, SGov there and VBill. Let's compare. Okay. So now if we look at these, obviously price will be different. A is 5.3 billion. So, still a lot smaller in the size of volume. Has more volume than I would say T-bill has. I mean, still plenty of volume, right? $128 million in a day. Get in and out without a problem. We look at the returns, basically identical, right? So nothing there to worry about. And expense ratio is 0.06. So I didn't even know about this. If I knew about this, I probably would have done this one. But again, it doesn't matter. It's 0.09 compared to 0.06. Obviously, VBill is better from that perspective. So yeah, it looks like if I'm looking at this now, I didn't know. I was researching. I didn't find VBill. If I did, I would have used it. But SGov shows is great. Just T-bill is 0.15 on the expense. And SGov and VBill are under. So, all right. Vera says, does it matter when you buy SGov? I mean, the start of the month, middle, or end of the month? Not necessarily. You might have an advantage if you buy it at the beginning of the month. So if we look at me, I just want my capital working and making money. I don't necessarily care about, 0.5% different, but at the end of the month, right, it pays out the dividend and then it resets its price from the dividend price, right? And so then it goes up and then it resets price. So technically you would get a 0.16% advantage if you waited for the beginning of the month. You bought in here. Now you get the appreciation of the asset from here to here, which is a 0.16% appreciation. And the dividend would hit and come back down. They go up and the dividend would hit and come back down. So that's why you're seeing this difference is, appreciation of bonds, making money, whatever, pay out the dividend, it resets, pays out the dividend, it resets. So yes, you would have a slight advantage by 0.16% if you waited for the beginning of the month. But for me, I would just prefer to get my money in the market in this working, allowing it to make money so that I can get the payout. Dale says slightly better expense ratio. Yeah. So Dale, I think VBill is great. I don't know why I didn't hear about it, but I mean, still a lot better than more than 50% better than the T-bill expense ratio. So yeah. Vera says, how and when is the dividend paid out? Yeah, it's paid out once a month. You can see here. X dividend was 30 cents per share. Payment date was February 5th. So it looks like it's actually paid at the beginning of the month. Yeah, it's just paid to cash. And so again, most brokers allow you to segment what you want to do with dividends. You can either automatically reinvest dividends, which is nice. So you can just reinvest it, or you can take it as cash. But yeah, so with about 100 shares that I'm working with, that comes out to about $300 a month from just having it stay here. So that's a lot better than my cash just sitting in the account. I mean, we talked about this in our trainings where with our bots, we are making a very good return on the amount we're using. We're only using 30 to 50% of our account to make an overall account return of 20, 30%. So very good considering we're using a fraction of our account to make a large return. If you think about it, we're using 30% of our account and making about 100% return on it because we're making a 30%. Anyway, needless to say, very good return, but we don't want to put all our cash in trades. It's not wise, it's not prudent, whatever. And so you're going to have a cash balance and then you're going to want that other money to sit somewhere. Now, Fidelity is amazing because Fidelity will just keep the unused cash in a money market generating 4% a year. So they're basically doing this for you. I believe Charles Schwab has the same thing, but tastytrade doesn't. And so because of that, I need to manually put it in something like VBill, SGov, T-bill, so that I can get that return because the broker isn't doing it for me. So yeah, that's kind of the reasoning there. Perfect. All right. Any other final questions before we go? Good to see here. We talked about the options trading toolbox. If we're not using it yet, it's literally free for everyone, and especially unlimited access free for options auto trader users to literally explore strategies, be able to trade, see the actual data, see what's happening, all for literally tools that you would pay, I don't know, combined $400 a month for easily to get for free. So check that out if you haven't yet. Check out our Discord. And yeah, I think that's all I got for today. All right, with no more questions coming in, thank you guys so much for tuning in. Look forward to doing this next week. As always, it's a pleasure. I'll get this recording edited up and live so that you guys can watch the replay. But other than that, thank you so much, team. Enjoy the rest of your day. Dale, Kalen, Robert, Trone, Trushant. And yeah, if you have any questions in the meantime, feel free to reach me at our private Discord or send me a message, and I'd love to help you out. The portfolio reviews that I'll do on your account happens at the beginning of the month. So in about 2 weeks, you'll get my review of your account to see how it's doing, how it's performing, and what needs to get changed. Again, that's for my unlimited members. All right, guys. See you and have a great rest of your day.